Hey everybody, good morning. Welcome to Stock Trading Pro. Today's Stock Market Live is going to talk about a bunch of stuff. We're going to get into research today. We're going to have another book recommendation today. I'm going to take you behind the scenes into some of the research that I have and the best stocks to buy based on, we actually have a good question here this morning, and I'm going to actually call it out because it was the first one that we talked about today. We're going to talk about the new news about Bitcoin and regulation. I think that's probably one of the biggest things that all of us have been waiting for in the Bitcoin area. So we have a ton of stuff to talk about. We're going to talk about oil. We're going to talk about the financials. We're going to talk about the airline stocks today, about whether the airline stocks are actually bottoming out. If you watched yesterday's video, we actually pointed out and taught a really long lesson on exhaustion, accumulation, distribution, and the different types of price action that cause stock market reversals. But what we're actually going to do here first today is this question here, which is a really good one by Yehuda. We're actually going to talk about that as soon as we come back. So stick around. We'll be back. If you're wondering why stocks are rallying today and how you could have predicted that yesterday, today's Stock Market Live is exactly what we're going to cover today to discuss that. So stick around. We'll be back in just 1 second. Okay, so good morning, everybody. Obviously, the big thing we're going to talk about today is how far up the futures are this morning. We're actually up what's called now 68 handles. So if you learn language in the stock market, handles in the futures market essentially means points. It's just a really exciting way to sound like you really know what you're talking about. One big thing that we're going to talk about, William actually asked a question last night about how do you identify the difference between a short covering rally and fresh buying. And actually, Yehuda actually brings up a point about this as well. So we're going to talk, I hope I pronounced your name correctly there. So we're going to talk about that. But I think the biggest thing I want to talk about on this question right here, why are you so sure a rally is coming? And I believe he's talking about the image that we put on the Facebook, on the YouTube thumbnail this morning in reference to plug. So here's the thing, Yehuda, and hopefully you're a regular viewer of our channel. And if you're not, please do me a favor, click down and subscribe so you get updates every day. We don't predict. I can't guess this strongly enough. And this is really what separates somebody from who is a trader from somebody who is a chart reader. There's a giant difference between the two. Anything that we do, anything that we teach in reference to buying stocks, once you find the best stocks to buy now, and you look to pick those stocks to put on positions. And I'm going to show you a trade from yesterday that I said was my favorite setup yesterday. Everything was looking perfect. I was all set to buy the stock, and it did nothing that I expected it to do. Let that sink in for a second. That's real trading. We had a specific level that it needed to trade it to, and it didn't. So we just let the stock go. So I want to, and I think a lot of people have this language. So Yehuda, you posted it, so I'm going to call you out on it. I want to use you as an example for everybody else who's here looking for the best stocks to buy now. Is why am I so sure? We're stacking the odds. We're stacking the order flow. We're stacking the reasons that we like the trade. Then if what we expect happens, then we place the trade and we accept the consequences on either side of the trade. So I just can't get this across strongly enough. We're going to talk about a short covering rally today. We're going to talk about the best stocks to buy on today's Stock Market Live like we do every day. But I am sure that I have good ideas. What happens after the idea, that's up to the market. So I think that a lot of people get into trouble, and I'm going to point this out to you on some of the ideas that we're going to talk about today. And by the way, thank you for the question, okay? Because I think a lot of people probably have the same question. Hey, Simon, good morning. How's it going, pal? So that's really the biggest part I want to get across here is a lot of traders, and I'm going to show you the stock, okay? We're going to pull up the stock from yesterday. We're going to go into the daily chart, and we're going to take a look at this stock. So if you remember yesterday, okay, we came into the day yesterday saying this stock, I love this stock today. It's doing everything you could possibly want this stock to do. It's pushing up. It's pausing on light volume. It has an obvious level that it needs to get through. And let me actually zoom that out for you a little bit here, which was basically this level. That was the first level it needed to get above. We said $40. And then if it closed and got above this level, then we would look for a second piece of that trade. So again, this is a great question, is why am I so sure? I am so sure because my mindset and every active trader's mindset who sees reliable account growth, buys stocks and sees their account go up steadily month by month, not trade by trade, month by month, is what is probably going to happen next and what do I definitely plan to do? Now, the first part of that before you buy a stock is you have to learn how to stack the odds. And stacking the odds is different time frames. And this is really part of stacking the order flow and tape reading. Tape reading and stacking the order flow are probably the biggest 1-2 combination that you could have. So the question is, how am I so sure? It's because I did 2 hours worth of research every night and I came up with the highest probability of what's supposed to happen next. Now, if you're struggling as a trader right now and you're finding that you know everything about the markets, but you can't make money, it's probably because you don't have, number one, conviction in your ideas because you didn't do enough game planning and putting those ideas together. And number two, which I think is by far the biggest part that traders struggle with, is that everything we do as stock traders is based on probabilities. Okay. So I'm emphasizing what was said before. Why are you so sure? I am sure because I know probabilities over time work in my favor if I do a good job of stacking the order flow before I buy stocks. That's what I'm sure of. This is what I can't get this across to you strongly enough, is that you should be sure of the odds over time, but not one trade at a time. That is the biggest secret that you will ever learn about trading, is that it's not your ability to predict what's going to happen next on a trade by trade basis. It's the skill you develop over time to stack the odds in your favor, and then the probabilities work themselves out over time. And when I say time, I'm talking about over a large enough sample size of stocks that you buy. That's where traders, that one little mental shift will change everything for you in the markets. Let's define what trading edge means in the first place. Before you look at the best stocks to buy now, you have to have the right mindset that says, okay, if I like these stocks based on all the game planning I did, they match my edge. And this is a big thing. So like when we go in every day, and whether or not it is the research that I give everybody in our community, and we break this down, we're going to get into this in a second, or if it's simply scans that you run in FinViz, okay, whether you're looking at the day, the week, or the month, and you're stacking all of those pieces together, what trading then comes down to, okay, you scan first for the ideas that meet your edge. First, you're not looking for every idea. You're only looking for ideas that match your edge. But let's define what edge. And I'm harping on this because it changes everything as a trader, okay? I'm harping on it because it's that important. Once you understand and believe that you have an edge, which means you think something's going to happen more often than not over time. Now, here's where really smart people get into trouble. They believe edge means all the time. That is not the case. Edge means most of the time. Edge means enough of the time that it's worth you accepting risk. So going back to what was posted at the beginning here, what I am absolutely sure of is that if I do the job and stack the order flow in my favor, I am absolutely sure that over time I will get follow through. Then it's a matter of managing the downside and gaining the skill to make more on winning trades. So I want to go back to that because it's that important. I am absolutely sure that my edge is present, and I am absolutely sure that over time I will make money because I kick out my losses and I hang on to my winners in the current market conditions. That's what separates you from going to the bank every month, from being frustrated and saying trading doesn't work. That guy on that YouTube live doesn't know what the heck he's talking about. That's probably because you're judging results based on one trade. And this trade from yesterday is a great example of it. And there's two things that we could bring out from this. I absolutely love this idea. All the criteria that you could possibly want. And I said this yesterday. Light volume pause, drop down on volume. Everything looked amazing. Everything. And I said if I got over 40, that would initiate my first piece of the trade. It traded in the other direction. We didn't get follow through, and I simply went over to some other ideas. That's real trading. The traders who are frustrated don't think from a probability perspective, which again, we've talked about the book all the time, Mark Douglas, Trading in the Zone, probably the best book that will be life-changing for you. Once you start to understand that, here's the thing you want to write down, and I can't stress this strongly enough. You need to be sure in your edge and your ability to follow it, not in your ability to say that every trade you look at will follow through. It's a Grand Canyon of difference. I am 100% sure in my edge and 100% sure in my ability to follow it. But that does not mean that every trade will make money. The sooner you internalize that, think about it, accept it, and then actually trade one trade after another, you will understand that the secret to trading success, if you have an edge, and obviously my edge is order flow, that's what we teach in the boot camp. Then the second part is, do you follow your edge and believe it will work over a large sample size of trades? So that question got brought up right at the very beginning of the live stream. I love those kind of questions. The next thing we're going to talk about now is this, which is a video that we did about, I think it was early in January, short covering rallies. So we started to talk about when we have rallies in the market, where are those rallies in the context of the big picture? So what is that situational analysis? And we've talked about this a lot recently, and I'll show you what I'm talking about on the charts right now, which is the SPY. The SPY is probably the best example that we can use right now, where we have longer term bearish order flow, but bullish momentum against that bearish order flow. So here's the big thing. You need to set your initial profit targets, your expectation for follow through. So let's just keep it high level. Are you shooting for a 2-to-1 risk reward or 3-to-1 and more? So remember, when we accept risk in the context of that trading edge, we have to know that if we accept risk, number one, we believe we're going to get follow through more often than not. Number two is, what is the acceptable risk based on the likely profit target to put that trade on in the first place? So we have bearish order flow in the bigger picture of the market, but short-term momentum to the upside. So the way that I manage those ideas, we're still looking for a little bit of, how can I word this? Shorter term trades to the upside, where we'd be more inclined to be scaling out or booking profits, or we have two different types of profit maximizers. We have a profit maximizer for momentum type trades, which are cash flow, and then we have profit maximizer for a little bit longer term trade when we stack everything together, the market, the sectors, the groups, and the stocks. So when everything is lined up together, then we shift out to the trend trading profit maximizer. So what's kind of cool about this is, before the trade even starts, I know what kind of profit maximizer I'm going to use based on the conditions. So if we take the most recent rallies in the market, so say, for example, this one against the bearish order flow, this one here against the bearish order flow, and then potentially, let's see, we're at 423 right now. So the market is right up in, like right in that area right there. If we start to rally now against this move to the downside, this is where we talk about it all the time. And you script out what you plan to do before the market opens. I already know going into today, whether it's a day trade or a swing trade, whichever stocks I buy today are going to be, in this case, momentum profit maximizers, shooting for a minimum of 2-to-1. Best case scenario, we hit the 2-to-1. Then I shift over and see how much more is left on the trade. Here's the big thing I want to get across to everybody. I am not only shooting for a 2-to-1 profit on these bullish moves in the bearish environment. That's the expected likely profit target in a bearish move and bullish momentum. It's not the most I'm trying to make. So think about this. I'm expecting it or game planning for it to go up to 2-to-1. But once it gets to 2-to-1, I shift into profit maximizer mode and I look to see how much it can get. That's the difference between making 3-to-1, 4-to-1, 5-to-1 on good trades versus 1-to-1, 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 where you're so scared that your profit's going to be taken away. You book a profit too soon, and then you see the thing continue to fly when you already had the trade, and now you're angry because you say trading doesn't work. What I'm teaching you now is, and I can't stress this strongly enough, Profitable trading happens before you place the trade, before you buy stock. Whatever you believe are the best stocks to buy now, before you do it, you need to write out what is the edge? How strong is the edge? And the bigger picture, is the market going down? Is the sector going down? Is the market going up? Is the sector going up? And then you break it down one level above that into industry groups. So right now, we've been talking about a few industry groups, solar stocks and airline stocks, obviously looking to reverse, but solar stocks have been at the top of the list. And if you watched yesterday's video, which I hope you did, we also talked about electric vehicle charging stocks. So we went from the market is bearish to the sectors are bearish, but we found an individual industry group that was strong, and we traded the heck out of it for the last couple of days. That, again, the game planning process, and I'll show you like the research, okay, just to give you an idea of some of the stocks. Obviously, Plug stock is one of the ones that we're talking about today, and this is the one that stirred the whole conversation. We are now looking at Plug at an obvious level. We have a big push down. We broke the trend here, and now this is the box that Plug is trading in. For me right now, again, it needs to get above 26. And right now, pre-market, Plug is trading above 26. So that means that I am now, and I want to point this out very clearly. This is something that gets asked all the time. Okay, Scott, just happened to mention pre-markets, right? I don't teach pre-market trading. I don't teach after hours trading. I don't teach over-the-counter stock trading, and I don't teach penny stocks. I trade market stocks during market hours. I just want to be clear about that. So even though it's above $26 right now, I'm waiting for the stock to open, because where it opens and where it's trading now and where it opens might not necessarily be the same thing. So I'm going to tell you how I plan to trade Plug stock today. I am going to wait for what I call the opening range. After the opening range forms, then I plan to make a trade. Then I will have my entry, my stop loss, my position size, setting up the next trade. So what would be the initial profit target if all of those things unfold? So I want to give you a couple of stocks, though, that we just talked about. So Plug, BLNK, and EVGO. Those are the ones that are kind of on my radar right now. And you can see that EVGO actually traded through there. Okay. The other area that we just talked about are the solar stocks. So again, I want to walk you through this. This is a part of game planning, and I can't stress this strongly enough. Before you choose whatever the best stocks to buy now are, you need to know how you plan to manage them. So remember, we just walked you through the stock market power pyramid without even labeling it that. The market, which is the Dow, the S&P 500, and the NASDAQ. One level above that are the 11 major sectors that we watch, and then above that are industry groups. So as we do the research, as we do the game planning, and we walk you through this every day, when we start out with the sector rotation, the very first thing that we know we're looking for is, first we start out with the market, then we go into the sectors looking for opportunities. So the sectors really over time have not really been performing that well. So then we had to go one layer higher through that and find some ideas in individual industry groups. So we take that even further, and now we talk about, we've been breaking it down for what's trading well now. So I want to walk you through what I have on this research document. It's one of the research documents that I provide to our community, obviously inside the boot camp every night. It's the first thing that I give everybody, so they have a list of stocks. And what we do in the boot camp, it's very done for you, where I'm giving you the research, I'm giving you the training, I'm giving you the entries, all of that kind of stuff. You just need to choose the stocks that match your personal risk tolerance. Buy the stocks that meet your account size. Buy the stocks that match your skill level. So what we've done now is we've broken it down saying bearish market conditions, bullish rally pre-market, but last night is when I did my game planning, and today I reaffirm which stocks I plan to trade based on how I mapped it out last night. So we have stocks strong for March from a percentage basis, stocks strong from Monday's opening price from a percentage basis, and then stocks strong for the last rolling 10 days. So it's 3 different ways of stacking the order flow, and then you go deeper into those ideas. So you run the scans first. I do the research first, and then I provide a video at night to tell you which of these stocks meet the criteria for us to consider tomorrow. But I think the more important thing is going into the research. That's where you get the ideas that pop out that aren't obvious in the bigger picture. So if we walk through this again one more time. So you can see here, ChargePoint, EVGO, stocks that are not necessarily in your list, and they pop up and run. Solar stocks, right? Not necessarily something that would be in your list every day, but when the same stocks and the same sector start popping up in different ways of looking at the market, all of a sudden you sit up in your seat and you say, wow, that's pretty interesting. I didn't normally trade those stocks, but a bunch of stocks in that same group are showing recent bullish order flow in spite of the market pushing to the downside. So I just gave you that list of stocks in the electric vehicle charging arena. Okay, that's the industry group. So now they're in my radar to watch. And yep, John, I like that one myself. Absolutely. So we're going to take a look at those stocks right now as well, just to give you some ideas. So we already talked about ENPH. JKS is another one that we're keeping an eye on right now. Run, XPWR, and Nova, for those of you that are looking for something maybe even a little bit less expensive. Now, I want to point this out. We're obviously talking about stocks that are now something that's very interesting, and I want to walk you through how to do this on something as simple as Finviz. You need to end the day saying, what is the market doing right now? And if we go back over to the market, it's very obvious to say, okay, this is what the market's doing right now. We're still in bearish territory, but we're having a short covering rally right now. So for those of you that don't know what short covering means that stocks are going down and people are betting on the stocks going down. So they made a short sale. So instead of buying those stocks, they bet on the stocks going down. So if you short stocks, you're borrowing that stock from your broker dealer. Sometimes you can, sometimes you can't. Actually, let me point that out as well. You'll notice on the sheet over here, this stock says HB. That stock says HB. What that means is the stock is hard to borrow. BBBY is hard to borrow. So that means that the broker dealer, in this case, I'm using TradeStation, did not have the stock available for me to borrow to bet on it going down. So if you see HTB or HB in your trading platform, that means that the stock is not available. So how does that tie back to short covering rally? Well, the more obvious the down move, which we've had recently, a lot of people are shorting that stock, betting it's going to go down. Maybe they're buying puts, looking for it to go down. Maybe they are short selling the stock outright. But to exit a short sale, you have to buy that stock back. So if you sold something you don't own, then if it goes down or if it goes up, you have to buy it back. The language you want to have as a trader is when you buy a short sale back, you are covering that stock. So you need to make sure that you have the language correct. And even in our Discord community, it's very important. So if you say I bought Chevron, for example, but you actually covered your short sale, you're giving bad information to the other members of the community. What you want to say is I covered my CVX. I'm just using CVX as an example. You say you covered your CVX, so that means everybody else in the Discord community now knows that you were short the stock, you got out, and maybe that's an opportunity. If they think it's bullish in whatever time frame, they could look to buy it. So that's the language of short covering. But the point is, when it's super obvious, a lot of people are shorting, when that stops going down, or like we pointed out yesterday, and I want to really, really drill this home because this was a big deal. We talked about this yesterday, if you remember. This is a big, obvious move to the downside. But one of the things that we pointed out was this, the heavier volume. Same thing in some of the banks, the heavier volume looking for short covering. And all of this price action is leading to where this selling is being now matched where they're stepping up and buying is coming into the market. So when short sellers have to cover, they're buying. So that causes that fast spike. And we saw that in the market in the SPY over here. This was a short covering rally. This was a short covering rally, right? It was actually, this one here was actually the Russian invasion, right? So the question that we get all the time is, how do you know the difference between a short covering rally versus fresh buying? Well, we kind of saw that in the solar stocks, and we'll just point that up again. Let's go to Run, for example. So we had this big move to the downside, right? Bearish order flow, push down and a pause, push down and a pause, right? This right here was a short covering rally, okay? The price action after the fast rally. So the first thing is recognizing a short covering rally. You have to recognize the bearish conditions. You have to recognize the increase in volume, and then it generally happens with a fast move. It's the price action after the short covering rally, which is bearish move, fast momentum move to the upside on big volume. So that's shorts exiting the trade. But what we're looking for is the next move. What we are looking for is, do new buyers step into that trade after the short covering rally? And what that means is when you push up and come straight back down, that was short covering because new buyers, fresh buyers didn't come in. So if you could think about it, why did it go up so fast? Well, people saw it stop going down and they're panicking now and they're getting out of the trade. So people are now piling up and it goes up fast to get out of the short. What we're looking for is a push up, a fast spike up that we recognize as a short covering rally. Then what happens after that? Is there more fresh buying after that? Do they, in the language that we talk about, do they hold the bid? And especially, do they hold the bid in a tougher market condition? So the market went down recently. These stocks actually did hold the bid. So if you can see here, we had push down, heavy short covering rally. It held the bid, stayed above the breakout level, and then took off again. So a couple of things unfolded here in a big way. Short covering rally, held the bid on light volume. So remember yesterday we talked about heavy volume is usually a reversal. This got pushed up, paused, held the bid. It also showed relative strength to the market the last couple of days. The market got hit the last couple of days, and look at what this group of stocks did. They actually held the bid. So it's kind of fun to put these pieces together. The more prepared you are to make a decision, the easier it is. Again, going back to the very first thing that we talked about on the start of today's Stock Market Live is why are you sure? And the fun part about that is I kind of twisted the question because the question was asked from the perspective of why am I sure it's going to go up? And how did it get worded? Why am I sure it's going to go up? And why is it not just a short covering rally? I am sure in my edge. I am sure in my ability to follow my edge. Now I sit back in my seat and now I'm just looking for follow through. That's what separates what you want in the markets from what you're probably frustrated about. You're probably reading trading books and you're like, no, on page 27, it says bull flags they're supposed to go up, and moving average crossovers, they're supposed to go up. Over a larger sample size of trades, that's where you make money. So I'm beating this because it's that important. You need to be sure in your edge and your ability to follow it. Stop trying to predict or expect every trade to make money. When you elevate your thinking from chart reader to trader, that's where everything changes. That's where you wake up every day expecting to make money because you know what you're doing, not because you have a great crystal ball where you can predict. When you watch this video one more time and take notes on what I just said, because if you really think about the way you're trading right now and you get angry when one trade or two trades don't work out, that means you are trading to be right, pounding your ego because you want to say, I saw it and it did exactly what I thought. That's not trading. Trading is putting it on, small win, small loss. Putting it on, small win, small loss. Putting it on, oh, wait, that one kept going. Where's my plan to add to that trade? And what is my profit objective and my plan to maximize that trade? It drives me crazy when people talk about win-loss percentages. ROI is the only thing that matters. Return on investment. Your account started out with 10,000 and at the end of the month, it's up to 14,000. That's what matters. If I told you right now, we were going to make 10 trades together this month, 7 of them we're going to be losing trades, but you're absolutely going to make money, would you give a hoot that we lost money on 7 trades? It boggles my mind how many people, what is your win percentage? Is that document back tested? It's about over time. Did your account go up this month? Stop focusing on the stuff that doesn't matter. Stop trying to be right. Stop focusing on win percentage and focus on kicking out your losers, working on your edge, and then learning the right market conditions on whether you're trading momentum, which is bearish order flow and bullish rally, or are you trading with order flow where you have bullish order flow and bullish momentum and you expand what you can expect on that trade, where those 5 to 7 to 10x winners pay for all those pain in the butt losses that you accept. That's how you make money in trading. I can't emphasize this enough, that when you start to think like a trader and stop thinking like you expect to be right, everything changes. Everything, I'm telling you. So I want to give you a couple more ideas for today. Obviously, we're I want to give you this book. We get we get asked about books all the time, and King of the Club by Charles Gasparino. This book is fantastic, actually. A lot of people know that when I had my trading firm in New York City, we had 25 former specialists from the New York Stock Exchange, clerks and brokers, come up to my office and trade. This is an inside account of what it was actually like to be on the floor of the New York Stock Exchange. This book is fascinating. Like, you can't even imagine what it was actually like to be down there. He calls it the King of the Club, basically because that's what it was. It was basically a club of 4,000, 5,000 men and women who just hung out every day and ruled the world until everything went digital. So if you're looking for a good read, this is a pretty good one. All right. I want to hop on over and give you a little bit more ideas on some of the things that we're going to be talking about today. Obviously, this is a story, right? Obviously, futures are rising. Oil, which, if you remember yesterday, we started to point this out, where Chevron, absolutely still bullish, but we pointed out yesterday that we were looking towards exhaustion, and you can see that they're going down. So Chevron, Exxon, and quite a few of these actually starting to pull back, and we called this yesterday. We pointed this out yesterday. And I want to be clear about this, because we talked about this. I'll zoom this in here a little bit for you, and just talk about what's going on here. Okay. We talked about that. I mentioned that many stocks are well beyond the optimal entry and traded into heavy volume exhaustion price action. It's early, but those clues led to this morning's bullish reversal. That's the big thing I want to get across. We talked about this yesterday. That's what game planning is called. And remember, we talked about price action. We talked about volume. Both of those are tape reading. It's not one or the other. It's the market. It's the sectors. It's the industry groups. It's the daily price action. It's the volume and where that volume happened. So yesterday, we were very clear. We saw exhaustion type price action in the energy stocks. And I know there was news on yesterday, as well as we're going to talk about Bitcoin in 1 second. We also saw exhaustion type price action in financials. We saw exhaustion type price action well beyond the optimal entry on the short side for airline stocks. And what's going on now today, a day later, we're seeing reversals. Now, again, going back to the very first question, we have no idea if it's a short covering rally or if it's fresh buying. If you are watching the market internals, specifically as a day trader, or you watch the advanced decline line on a bigger picture, what we are looking for is if we push up, pull back, and as we pull back, whether it's the New York Stock Exchange tick indicator, which is what I use for day trading, as we pull back, do we make a higher low in the tick readings? As we pull back on the daily chart, do we make a higher low in the advanced decline numbers? If you see that, even if we start to pull back, what is that telling you? Even though it's pulling back, there's less selling going on. So I want to point that out and what that means, so just so you have a visual, because I think it's very important. So on the daily chart, let me actually get the volume off of here. Excuse me, on the 5-minute chart. And this is one of the indicators that we use during the day, the tick. So I'll use the New York Stock Exchange cumulative tick. So what we're talking about is a situation right here. Okay. So if you look here between 11:30 and 12 o'clock, stocks push down more often where there's a larger dominant supply of stock on the market, and we push down to this big number, which in this case here was negative 1,115. But then from 11:30 to 12:30, within this hour, stocks were still pushing down, but the tick reading was significantly higher. So what does that mean? What does it mean if the tick reading has a higher low? What does that mean if the advanced decline has a higher low in that moment? That means even if you're in bearish order flow, at that moment, there's less stocks being pushed down. So this is where you raise your hand if you've ever shorted a stock or bought a stock. You're like, I don't understand. It looked perfect and it reversed on you. It's because you need to take this one extra step to say, okay, big push down, heavy selling, price action matched the market internals. Next push down, but the internals are not pushing down. So what you're basically saying is the car is going, but you're not stepping on the gas anymore. That means something is changing. So if we take a look at that and see how that affected price action, here from 11:30 to 12:30, you can see that right here, 11:30 to 12:30, right? Here's 11:30. So you had a big, what we call a double bottom here in the market, but in this same moment in time. And again, this is actually really cool because if you go back to the very first question that we talked about tonight is how are you sure? And we talk about stacking the odds. Well, we just stack the odds where we're looking at a potential breakout at the same time that the market internals told us that there was less selling. So this would be a different situation where we would consider buying the breakout because the market internals are showing us that less selling is happening in that window. This is really kind of cool. It might be advanced for you. Go back and watch this part of the video again, or if you want to learn how we do it, you can click down in the video below the description and you'll see it. But here's what's cool about this. So we already just discussed that between 11:30 and 12:30, despite this going down here, was less. When we start to get up to this window over here at 12 o'clock, and we saw that big divergence, the odds of this following through are significantly greater. So again, we get quite what's short covering rally? What is tape reading? How do you have higher conviction that stocks are going to follow through? That's how. Then we take it a step further, and now we go into the individual sectors that you have to build those watch lists out. So we talked about electric vehicle stocks before and charging stations. We talked about solar stocks. Taking this a step further, and I'm telling you, all of this success happens before the market opens because you're prepared with the list. You know what you're going to look at. We talk about it all the time, and I said this to John Bates the other day, right? What do I want to see, and what do I plan to do? That is what will separate you from trading doesn't work to I know what I'm doing, I just need follow through. That's the big deal. So if we go back to these opportunities even yesterday from a day trading perspective, and we take a look and see what happened and how did we interpret that in order to make the next trade. Well, this breakout right here was a pretty high probability breakout simply because of what we recognized in the tick reading. Now, what's kind of cool is all of that was done in real time together. I just can't express that strongly enough. Everybody in our community knows that that's what we do. So when you understand, first, what am I looking for? You're not lost anymore. Second, if I see what I'm looking for, what do I plan to do? Third, if I know what I'm looking for and I do not see it, stop trading. That's where you get into trouble. You try and find something to do instead of saying, no, I am only going to accept risk when I see my edge is there. And over a large enough sample size, that's where money comes from when you buy stocks. That's the secret sauce. It's not about the perfect moving average. It's not about all of the other technical analysis stuff. That's important because we obviously have to stack the odds and do that over time. So obviously, when we're stacking that kind of stuff, we're obviously talking about over time. We're talking about over time. We're talking about over time, the week, the month, and the day. All of that goes into stacking the odds to make better decisions, expecting follow through. And if it follows through, awesome. If it doesn't follow through and you put the trade on, you kick it out and you go look for the next opportunity. These are the kind of things that I get super pumped about talking about on these stock market lives because, I got a good question the other day. If you're such a good trader, why are you doing these videos? Well, why not? Why not? It's 7:30 in the morning. Why not? I also read a good quote the other day that says, when somebody gets excited about teaching something, it's because they went through that and understand how important it is that when you learn that, everything on the other side changes. So that's when you hear me get loud. I get loud because I get excited about teaching something that I'm hoping will make a difference for you because it made a difference for me. So anyway, I have to get ready and go to our other gameplay meeting, which our bootcamp gameplay meeting, which starts in a little bit. So if it's your first time to the channel, if you haven't done so already, please do me a favor. Make sure you hit that subscribe button and smash the like button if you got some value out of these things. So we talked about the new Bitcoin regulation that came out. We just kind of touched on it a little bit. We'll see how that affects everything. Solar stocks have worked their way up the list. Electric vehicle charging stocks have worked their way up the list. We saw exhaustion type volume in airlines and bank stocks, financial stocks. They're all in bearish order flow. So these would really only be shorter term day trades if we even look at them today, maybe looking for the short covering to find some bids and head back in the other direction. So have an awesome day, everybody. I want you to know how much I appreciate you being here with me. I'll speak to you tomorrow. Take care now.